Hey guys, Max here, and yesterday was absolutely crazy for the markets. We saw huge rallies across the board, loads of equities were up for the day, indexes all over the world were up in fact, commodities were volatile too, along with bonds and gold, just a crazy day with crazy volatility everywhere. Now we're of course going to cover what exactly happened, why it happened, and a couple of developments in Russia and just one other thing, so let's get right into it. So markets were up across the board as I just said, but what happened in Europe first? Well, the FTSE 100 rose by 3.2% for the day, the Stoxx 600 rose by 4% for the day, and the DAX went up 8% in one day, which is absolutely ridiculous. Now we actually saw pretty major gains across the pond in American equities and their markets as well. The S&P 500 rose by 2.6%, the Nasdaq was up by 3.6%, really a strong day, almost every single sector up as well. The only specific sector that was down was basically oil and energy, and we'll get into why that was in the moment, but everything else was green as far as the eye could see. Now, why did equities go so strong and perform so well after weeks of struggling? Well, over the past few weeks, there have been loads of losses caused basically by the war in Ukraine, fears of how that war might affect inflation in the US and in Europe, how it might spike energy prices and how it already has, and what sanctions and the impact of those sanctions might have on Western markets, and this all caused big market routes. Yesterday though, we saw news that Russia and Ukraine might see an end to that war. To be honest, the news really isn't that substantial, but it is a shift of pace from the negotiations between Ukraine and Russia, and the markets jumped on it. Basically, Russia has a few demands for them to stop the war, for them to end the invasion. The first one is that Ukraine needs to demilitarize entirely. Basically, they need to disband all of their military, send all their troops home and get rid of all of their military equipment. The next thing they want is for Ukraine to recognize Crimea as Russian and for them to recognize Donetsk and Luhansk as independent states, basically to give up their claims on those lands as a sovereign nation. Finally, Ukraine has to agree to be neutral in the future, not to seek to join EU or NATO, NATO being the really big one there. Now, the first one of those demands is absolutely ludicrous and it's never going to happen. Ukraine was just invaded by Russia. Their military is the only reason Russia is losing that war, and they will never and should never demilitarize. The only way that it comes to this point and they accept that is if they lose the war, if Russia takes complete control over Ukraine, if they install a puppet government with Zelensky in charge and with the Ukrainians still holding on to most of their territory. That will never happen. Now, the second and third negotiating points, their demands for Russia, it's a very tough pill to swallow. It's not technically impossible, but it's pretty unlikely it's actually going to happen. The truth is that Ukraine actually has a lot more leverage here than we thought they would and that Russia thought they would. Russia is losing this war. They have completely stalled. They're not making any progress. We will put out a full update on this in a couple of days. But that just means that Ukraine probably isn't going to accept this negotiating point. Now, the fourth point is quite similar. It's tough for Ukraine to swallow neutrality. They want to join the West. They want to embrace democracy and capitalism and to get richer. And even more so now that Russia has declared war on them, invaded and murdered thousands of Ukrainians. But it is possible they agree to this if it ends the war. Still, though, I do think it's a little bit unlikely. Now, that was Russia's negotiating position and their terms to end the war over the last week, basically. And yesterday we saw news that might indicate, and I have to emphasize might there, it might indicate that Ukraine might be willing to accept neutrality to end the war, which makes negotiations a little bit more likely to be successful, and it means we might be seeing an end to the war here. Specifically, what Zelensky said is that he is willing to no longer pressure for acceptance into NATO, but he probably does still want to pressure acceptance for Ukraine to join the EU. It's a little bit hard to say right now. Basically, there might be a diplomatic solution to the war here. Not much progress has actually been made, but that is a very small amount of progress, and markets took that news and they flew with it and they rose a crazy amount. Now, let's be perfectly clear here. The rally based on this news is entirely irrational. It's not actually that big a development. It's actually been against the rules of NATO for Ukraine to join the organization since 2014 because Crimea and Donbass are disputed territories which disbars Ukraine from joining it. It was never really a possibility that they joined in the first place, and it still isn't with those territories and now more territories disputed, but markets are very volatile right now and inefficient, and they jump on the smallest bits of information and news and they rally on it even if it doesn't really make any sense. As of right now, in fact, futures across the board are down about half of the gains from yesterday, so maybe they repriced a little bit. They've had some time to really consider this news, to consider what it actually means for the markets and the economy, so I guess we'll find out today. The big takeaway here, in my opinion, is that volatility is still here and it's not going anywhere. And positive or negative is still volatility and an indication that markets are in turmoil, that they are completely unaware of how they should be pricing assets. Now, another reason that we saw stocks rally, and really this is very related to that news about negotiations between Ukraine and Russia, it's that oil prices fell loads yesterday, which markets of course liked. Oil prices have been crazy high, and this is awful for the economy and for inflation, so it's very worrying, and it's mostly predicated on this war drying up supply, so news of maybe the war ending caused prices to fall drastically, and markets of course like that. Oil fell over 10% yesterday on this news alone. WTI crude oil fell 11% in fact, and it's now sitting at $110 a barrel, so a significant fall from the peaks of a few days ago, and very nice to see, no doubt, but still a very high price. Whether or not this change is rational or not, we still don't know. We will find out over the coming days as prices either stay here, or they go lower, or they go back up. I think personally there's a decent chance that we see them rising again because I don't think the war is over yet. Now, in the world of risk-off assets, in bonds and gold markets, what happened? Well, there were huge outflows from risk-off into risk-on assets. People flooded into riskier things like stocks and shares and crypto and tech stocks in particular, so bond prices and gold prices both fell. Now, obviously, as bond prices go down, bond yields go up, and they advanced about 10 basis points across the board. The US 10-year Treasury yield advanced 9 basis points. It now sits at 1.94%. The German 10-year yield advanced 10 basis points, and the British 10-year yield advanced 8 basis points. Basically, if war ends, investors want to be in stocks, not bonds. If war continues, they want to be in bonds, not stocks, and the markets are trying to price the likelihoods of the war continuing or it stopping. Now, gold, as I just said, moved in that same direction, and it fell for the day about 2.4%. It's now sitting at just under $2,000 an ounce, a fair bit off the all-time highs we saw a couple of days ago. Before the war, though, let's remember that gold was sitting at around about $1,800 an ounce, so still comparatively very high. Now, the same is to be said about equities actually. Even after the major rally of the S&P 500 yesterday, that index is still down almost 11% year to date. Lots of people seem to be conveniently forgetting that. Now, in the world of currencies, the dollar saw a slightly weak day. The dollar has been seen as a bit of a safe haven during this war so far. There have been loads of inflows, so very strong performance the last few weeks. The pound, for example, has been sitting at $1.30 at some points during this conflict. A couple of months ago, though, it was sitting at about $1.38, so a strong dollar recently, but slightly weak yesterday, falling about 1% against the index of the currencies. Why is that? Well, the same reason as every other movement we saw yesterday. The dollar is seen as safer during this war, so if the war continues, the dollar will continue to do well, and if the war ends, the dollar will do less well. The ruble, on the other hand, did awful yesterday and fell another 10% against the dollar. This is an exception though, because the Russian economy is on the brink of collapse, so the ruble fell against everything everywhere. Now, what happened in the world of crypto? Well, the market boomed at first, it rose a bit, Bitcoin pumped above $42,000, and Ethereum and altcoins followed as well, as risk-on assets all over the place did well. But I'm making this video the morning of the 10th, just before you watch it, and right now the crypto market has seen a little bit of a crash, and it's down since yesterday. Bitcoin is currently sitting at about $39,000, so it lost those gains it made. Ethereum is sitting at about $2,600, so it lost its gains too. Altcoins are down across the board between somewhere in the range of 3 and 8%. Now, there is no specific news for the day for this, or at least I can't find any. There was an executive order that came from the Biden administration the other day about crypto that was largely seen as good, and that caused a pump, but that pump is now been erased. Now, on a quick note, there will be a video coming out on Stoic Crypto later today, giving an overview of that executive order, explaining exactly what it means, what's good about it, what's bad about it, and what we can expect for the future. So make sure to check out that channel. Stoic Crypto, link as always is down below in the description. Now, as usual, let's have a quick update on the situation in Russia and what's happening there. And of course, it's more of the same. More companies are halting the work they do in Russia. We've already seen McDonald's, YouTube, Twitch, MasterCard, Visa, Apple, and countless other companies halt services. As of yesterday though, we've seen more companies added to that list with Uniqlo, KFC, Ferrari, Tide, Gillette and Pampers. Now, one company alone boycotting Russian business is not a big deal and that wouldn't really impact everything. But thousands of companies together, this is hugely influential and Russians will notice this kind of action. The UK government has also released more sanctions targeting Russian oligarchs, including Abramovich, who is a very famous oligarch here in the UK who owns Chelsea Football Club. These sanctions are worth about $20 billion, so a very large amount, especially when you consider that it's split just across, I think, 5 oligarchs. This is good to see. It was a bit slow of the British government, took them a while to get here, but the law we have means that if cases aren't built against these oligarchs before the sanctions are placed, oligarchs would then be able to wriggle free of them and get out without any trouble. We are, of course, also expecting more sanctions to be levied towards Russia, their oligarchs and their economy from the EU and the US shortly. These sanctions aren't going to stop coming anytime soon. Now, in slightly random news, Amazon finally announced their stock split of 20-1. So if you used to own 1 share of Amazon, that will be split up 20 times, so you'll own 20 shares instead, but the proportion of the company that you own will still be the same. Now, when stock prices get high, Amazon was as high as $3,000 at some points, it's hard for small investors to buy it, as opposed to if it's worth, say, $100. If you don't have access to fractional shares, then maybe you can't buy Amazon stock at all. Theoretically, a stock split will allow more retail investors to buy it, and it should increase demand for the stock slightly as well. Emphasis there on slightly. The long-term effect here should really be close to zero. It doesn't change the fundamentals of the business at all, but a price jump is still expected by this. The problem is, right now, Amazon is up over 6% on this news, which is utterly stupid. The market values Amazon $80 billion more today than yesterday, purely because of this stock split. This is the inefficient markets at work. It doesn't really make any sense and it shouldn't happen, but it does happen anyway because that's what gross money printing does. It destroys the efficiency of markets. Now, to be fair here, there is also a $10 billion stock buyback announced, but this shouldn't be able to move the markets or the stock this much either. It all reeks of just crazy, weird volatility. Now, if you like this video, then make sure to like and comment and subscribe to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio and buy and sell alerts for all my own investments. There's a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world-famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. It's completely free to sign up, so if that sounds interesting, then make sure to check it out. There's also a link in the description to BlockFi, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you get from any savings account these days. Just make sure not to use Tether. Thank you for all the support. Thanks for watching. Stay stoic. Until next time.